Well, joining us this morning to talk money is Managing Director of DLG Wealth Management, Andy Guzzetti. Thank you so much for coming on our Money Mondays segment.
Always good to be here, Stephanie.
Absolutely. Well, one of the biggest things ever since this big 2008 crash that we've been talking to over the past few weeks has been the housing market. How much was the capital region and, our viewing area, were they affected by the big housing crunch?
I think they were. I think everybody was. I can tell you this, that if somebody wants to buy a home, everyone is affected because banks have pulled in their horns. They're not lending out the money with mortgages now, so the Capital District. As far as prices, I'm sure that there are some segments in the Capital District got hit a lot. I would say the upper end didn't get hit as much as the mid or lower end housing.
Are we still in what they call a buyer's market, where if you do have the capital to be able to invest, should you be potentially buying properties right now to better yourself? Well,
I mean, it's tough to predict the low of the housing market. I would say that we're close to the low of the housing markets, but you have to think about that the interest rates are at historically low. So it is a great time to buy if you have the down payment and different things that you need. And again, banks are very reluctant to lend money right now.
Exactly. Now, kind of piggybacking off of that, buying versus renting. There are a lot of people, especially just getting out of school and whatnot, that people are looking to rent. Maybe they're not looking to stay in the area for very long. What should be kind of the guidelines that people should follow? If this is a buyer's market, should they be buying or renting?
Well, I can say this. If you decide to buy, there's some things that you really have to think about. Number one, you should have a down payment of at least 20 to 30% of the house value. Now, it might mean you have to take a longer time to buy the house or go down in value of a house, but you should have 20 to 30. The days of the no down payment interest mortgages are done. You also should have 20%. The payment on your mortgage should be 20% of your take-home pay, no more. In other words, it's great to own a home, but you got to afford it.
Absolutely, and of course, hopefully eliminating a lot of that risk, right, or possibly defaulting on those loans.
Because if we're not at the low of the markets, you still have some risk, and you got to have equity in that house. So, talk to the people, the millions of people who have been foreclosed on.
Absolutely. All right, Andy. Well, thank you so much for being on this show today. And thank you so much for watching. And hopefully you gained a little bit of knowledge. And we will be focusing a lot more on the housing market in about a month.